All right, you guys, happy Thursday. Happy Thursday. Welcome to your Thursday virtual lunch and learn. Hope everyone is excited for a very hot discussion on the most important. Well, let me not say the well, it depends. It depends. We'll keep it between us what you think is the most important part of it. But I mean, it's closing. I mean, everybody wants the closing, right? Seller wants closing, buyer wants closing. I know you guys want closing. So the closing table. Today's discussion: title insurance and the closing process for Florida realtors. What does it look like for us to go to clear title and send out that email that says release the keys, we are closed and funded? That is our discussion for today. A lot of familiar faces, of course, a lot of regulars. Happy to see everybody coming in. But we also have some new faces. So, welcome to our Thursday virtual lunch and learn with Purchase Ready Academy. For those who this is my first time meeting you, my name is Ray Cole Jackson. I'm a South Florida real estate attorney. A little bit about me professionally. I attended the University of Florida for undergrad, went over to California for law school, where I attended Santa Clara University School of Law. Was the founder of the Real Estate Law Society there, which is still operating today. Very proud of that. Um, Went on to came back home to Miami and got my LLM in real property development. I am a proud licensed Florida real estate sales professional and a licensed mortgage loan officer for the state of Florida. So, for that reason, we are a one-stop shop in our service offerings to our customers here on the team. Our team is newly branded Purchase Ready. That brand encompasses everything that we do for buyers and sellers. We are a full ecosystem where we equip buyers with everything they need to achieve home ownership, of course, sellers as well, and including education. Education is our main pillar. It is our main pillar of engagement for our customers, as well as helping them move through the lending, real estate sales, title, and closing process. Now, with that being said, of course, we would not be able to do what we do without the realtors that we work with. And so a spinoff of Purchase Ready is Purchase Ready Academy. And that is the umbrella under which we meet and we train the realtors that we currently work with and we aspire to work with. As you guys know, and I love how we saw in the chat, we are spread out all throughout Florida. And I don't know about you guys, but we get customers, we get clients, we get prospects throughout all of Florida, and I'm sure you do as well. And the same way that we look to refer customers to you guys to service them is the same way I hope that you guys would create a community, right? And where Lauren can't service someone in Orlando, maybe he'll send them to Victoria, and likewise for Victoria, she'll send to someone that might be in Palm Beach, right? So make sure we take advantage of that and just really take advantage of the opportunity to grow a Florida specific community. Now, that's one thing I wanted to say. Obviously, being in this space as an educator over, oh my gosh, is going on 20 years now. And of course, being in the space at a high level, one thing that I do see, there's a lot of, and I'm sure you guys see this as well, there's a lot of coaching, there's a lot of education online. Unless you go through your local boards, none of that coaching is Florida specific. And you guys know we are our own animal, right? And so, what became important for me is to create and curate a community and a curriculum that is specific to realtors, Florida realtors, especially as it relates to the core of your business, right? When we're talking about consultations, buyer and seller consultations, when we're talking about going under contract and we're talking about the closing process, that's very Florida specific. And so, the same way, if we're telling you guys to farm and market and talk about being knowing your market, nobody knows Florida like Florida, right? And so, Purchase Ready Academy, designed specifically for Florida realtors, is what we are aspiring to offer each and every day for you guys. So, we hope you guys enjoy and you find value. And I appreciate the feedback that I get continuously from you guys, that you find value. And with that being said, we'll touch on this more at the end. We are open door. If there are questions, if there's topics that you're not seeing through any of the associations or your brokers that you need support with, shoot us a message. Shoot me a message in school. Shoot Minnie a message or anyone. It's, for the most part, give us a couple of weeks and we can figure out how to get that information to you. If it's not a quick answer, if it needs to be a training, that you guys know that we have training scheduled already the month out, and we'll get into what is scheduled for June. But if it's a topic that we can drop into our training calendar, then we'll do that. All right. All right. So for today's discussion, what does a title agent do? So make sure you guys get the handout. Oh, thanks, Victoria. Make sure you guys get the handout. Everything that I'm saying to you guys today is in the handout. Of course, you're going to have access to the recording. So I want you guys to take in this information and then, of course, plan to just listen to it again. Listen to it again. And again, if you have specific questions, feel free to drop those in the community, or definitely you have an opportunity to ask those at the end. All right. So from the top, what does a title agent do? So the first thing I want you guys to understand is you've probably heard the term title and escrow, because a title agent has two functions, title and escrow. One, we issue title insurance at the end of the transaction, and then escrow is managing the money. Title and escrow. When you hear title and escrow, that's why you're hearing that. So what is title insurance? Title insurance is a form of insurance protection that insures against financial loss from defects in title to real property. Your buyers are getting an insurance policy at closing, similar to homeowners insurance, car insurance, life insurance, dental insurance. Now, of course, all of those insurances have different types of coverage, but understand that we issue a coverage policy to your buyers at closing, right? So that's the insurance part of it. Now, what does title insurance cover? It covers improper execution of documents. So let's say, for example, a seller did not sign their name properly, right? Maybe they only put their first name, not their last name, and that's not their actual signing. Or maybe their name was misspelled, right? Maybe someone was omitted. That is covered by title insurance. Mistakes in recording or indexing legal documents. We've had situations where we were closing on a file and the satisfaction of mortgage for Wells Fargo was not recorded properly. It was recorded against a different property. Their agent, their closing agent, was contacted because that needed to be resolved, right? Forgeries and fraud, undisclosed or missing heirs, unpaid taxes and assessments, unpaid judgments and liens, unreleased mortgages. Those are all examples of clouds on title, as we call it, or issues with title, that a buyer, if they're presented with that issue after closing, after they've received their insurance policy, they can come back and say, hey, we need this to be resolved, right? We need coverage here. All right. All right. Got a couple people in the room. All right. So we issue potentially two policies at closing. We issue a lender's policy if the transaction is financed. We issue an owner's policy on every purchase, right? So potentially two policies, an owner's policy to the buyer and a lender's policy if the transaction was, if the property was purchased via financing. Now, the policy that the lender is going to receive is up to the loan amount, right? So let's say, for example, we have $1 million purchase. The buyer only took out a $500,000 loan. The lender's going to get a lender's policy for up to $500,000. The owner is going to get a policy for up to $1 million, right? The owner is going to get a policy for their purchase price. All right. So 30,000 foot overview. You guys know I always take you guys up top first. 30,000 foot overview. What does the closing process look like? Of course, we open the file. First step is the escrow deposit being made. Once the escrow deposit is made, intake is complete, we're ordering our title searches. Title is ordering their title searches. From there, once the searches are in, we're going to clear the title issues. Anything that's reflected on those searches that needs to be resolved, we will work through those. Once title is clear, we're coordinating and communicating with the lender to match and balance. You guys probably heard the term before, the settlement statements. We're getting the figures from the lender as to what their costs are that need to go on the settlement statement. Once we are matched and balanced with the lender, we are scheduling closing. We're scheduling the appointments for the buyer and the seller to sign their documents. Once those appointments are scheduled, we conduct the closing. At closing, we'll obviously have the buyer sign their documents. We would have received funds from the buyer and the lender if it's a finance transaction, and then we fund. At a 30,000 foot overview, that is our process. Sounds very simple from there, right? Well, let's get a little bit into the details of each of those milestones. So the first step, intake and onboarding. What do you guys need to know as a realtor? We're going to collect the buyer and the seller's contact information: names, email address, current address, what is their desired forwarding address after closing. We're going to collect from the seller specifically their social security number. If it's an entity, their tax ID number. We do not need a social from the buyer. We do need a social from the seller because the purchase and sale of real estate is a taxable event. It's an IRS issue. And so at closing, that information is reported to the IRS. And those parties, the seller, has to pay taxes on those monies. Now, what ends up happening is if the seller is foreign or they don't have a social or they don't want to provide their social, then we would have to report that, send a portion of their proceeds to the IRS. So as a general matter for you, it happens on maybe 1 out of 10 transactions where a seller is leery about providing their social security number. And maybe they'll call and say, well, I don't want to place it on this document or in this system, but I'll verbally tell you what it is for you to type it into your system. And we get through it that way. As a general matter, what I'll tell you guys is for a communication purposes, if by chance you represent the seller and the seller reaches out to you and says, hey, Fedra, why are they asking for my social? Then you can explain to them that is a requirement because of the IRS requirement that all the sale of real estate be reported, right? We have to report that at the end of the year. And then, of course, we are collecting your information as a realtor. Along with the intake is the escrow deposit. Here's what you need to know. The escrow deposit, earnest money deposit is also called, can be made generally, depending upon the closing agent, by personal check, cashier's check, or bank wire, generally. Now, I'll tell you guys, we require a wire. We require a wire because, number one, it's good funds. What does that mean? Once that wire is made, we're not concerned about the check bouncing or there being a chargeback, because that happens. That has literally happened, not to us ever, but a colleague literally had a $25,000 check after closing chargeback. Had to sue the buyer, all the things to recover that money because the transaction had already closed. So with that being said, working with us or working with any other, if you work with another closing agent by chance and they require a wire, you understand why, and you'll be able to explain that to your consumer. Now, with that being said, there is the threat of wire fraud. And I want you guys to make sure you appreciate that. And then in your communication and your consultation with your buyers and your sellers, because wire fraud is a threat to sellers as well. Make sure that you advise them in your communication of the threat of wire fraud. So generally, it usually happens only with buyers. Minnie, drop that in the chat, the link to the handout. We have a couple new people coming in. You want to make sure that you never deliver wire instructions on behalf of the escrow agent. Never. I know that in times past, agents have held on to the wire instructions of the closing agent that they always work with, those sorts of things. Do not. Here's why. Because we want to get your customers in the habit of knowing, well, Vicious would never send me wire instructions. He's already told me that. So why am I receiving an email that says it's from Vicious with wire instructions, right? That's what we want to create. We want to create an expectation from your customers that wire instructions are only going to come from the escrow agent, from the closing agent, right? So The reason why you don't do it is because it's not foreign to them if they all of a sudden get an email from you saying, "Oh, the wire instructions changed. Send your wire here." Well, if you've already told them you will never receive a wire from me, then now their antennas are up. Okay. This on the screen is just an example of a um, wire fraud warning that we have in our email that the title team has in their email signature. You guys can have something similar to this in your email signature, which indicates I never send wire instructions. Always reach out to the closing agent to confirm wire instructions by telephone. Reach out by telephone. All right. All right. So that's intake and escrow. The next big step is ordering the searches. So you guys know that um, at the same time, once you go under contract, you're ordering what? Your inspections, your property inspection. You might be ordering a mold inspection. You might be requesting for a roofer to come out, right? And so one of the things that I always, one of the concepts that I always explain to buyers and sellers in homeowner workshops is I use the analogy of Power Rangers, right? Until I guess we can't use it anymore. It's kind of old, but you guys remember in Power Rangers or any of those superhero cartoons, there's a problem, right? But we know a Power Rangers, I think there's about 5 of them. The issue presents itself. The Power Rangers always all come together. They huddle. They all have their assignments. They put their hands together and they go 1, 2, 3, break, and they all run to complete their task. Well, that way of huddling and then running out to complete your specific task is how I explain to homeowners this particular step in their contract to close process. At this phase, there are a ton of examinations and searches of the property that are taking place all at the same time, right? So while you guys are ordering the property inspection, right, we're ordering our own, title is ordering their own searches, which includes a title commitment, right? We're going to do a title search so we can obtain a title commitment. We're ordering an estoppel, we're ordering a survey, and we're ordering a lien search. We're going to go over all of those shortly, right? So the title commitment. A title search is a review of the property's history of documents recorded in the public records. We order a title search. We particularly order a title commitment. But to prepare the title commitment, our underwriter is going to order a search of the property. So they're going to go against it using the legal description, not the property address, the legal description. They're going to pull all the documents that are recorded against the property. Of the documents that are recorded against the property, they're going to say these recordings need to be addressed. This quitclaim deed is not executed property. It needs to be addressed. This mortgage needs to be paid off. This notice of commencement from this contractor needs to be resolved, right? This code enforcement lien, recorded code enforcement lien, that needs to be resolved. And all of those items which require resolution are reflected in our title commitment. The next search is the lien and open permit search. It's a lien search. The lien search, different from the title search and title commitment, it will report matters of records with the municipality, such as property taxes, water bills, permits, and unrecorded code violations. In the prior slide, I said recorded code violations are reflected on the title commitment. Unrecorded code violations are not, but they are oftentimes identified on the lien search. Okay. The next search is the estoppel. We ordered the estoppel from the association. This will provide title with a ledger of the account, right? Letting us know what's the balance, are there any payments due, are there any requirements for the association approval? So it'll tell us whether or not a buyer application and approval is required. It'll also tell us whether or not there are any existing violations on the property that need to be resolved. That's our third search order. The last search order is a land survey. The land survey is conducted to confirm the property is within its boundary lines. It provides confirmation that none of the property structures are over its boundary lines. So those are essentially the 4 searches that we order. Notice I did not say appraisal. We don't order the appraisal. The lender orders the appraisal. We never even receive the appraisal in title, right? So we've ordered those 4 searches. The next step is to review the results of those searches and clear any issues. So here is an example of a title commitment. This is Schedule A of a title commitment. Now, as you go through the closing process, you all should receive all of these documents as the closing agent finalizes them, right? Everyone should receive a copy of the title commitment, right? Everyone should receive a copy of the estoppel, the lien search. Generally, only the buyer receives a copy of the survey because they paid for that, right? But this is what's called Schedule A of a title commitment. Just to go over it really quickly, if it's a finance transaction, it's going to show who the policy is being issued to. Now, just for your understanding, know that a title commitment, in essence, is the title agent saying, I commit to issuing you an insurance policy under these terms. These are the terms. This is the owner. This is the lender. It's telling us who the prior owner was, but these are the terms. B1, this is our requirements, right? So about page 3 or 4 of your title commitments, you're going to see the requirements. And it says, again, this is saying all of the following requirements must be met for me to issue you title insurance at closing, Mr. Buyer, right? We're going to need a deed executed from the seller. We're going to need a mortgage executed by the buyer. We're going to need a satisfaction of this mortgage from the seller, a mortgage that the seller took out. We're going to need a release of this memorandum and agreement. This is a PACE lien. This is the old language for a PACE lien, right? We're going to need to resolve the notice of commencement. So remember, I told you guys, my underwriter went and they ran the legal description of the property, and these are the items that they identified that were recorded against the property that must be resolved. This is the only way we're going to give you insurance, right? All right. So, lien search. Show you guys an example of what a lien search looks like. This is a lien search result from One Step Lien Search. I like theirs, and there's others that are great, but this is color coded, right? So you can quickly eyeball this and see there's no issue with the property taxes. They're not delinquent. There's no issues with any personal taxes. There is a water bill, and this is expected. Pretty much every transaction, unless it's on a single meter with like condominium, there's usually going to be a water bill, right? And that water bill is going to be paid at closing. You see here on this lien search, there is an unrecorded code violation. It's in red. Now, here's what I want you guys to know again about unrecorded code violations and permits. Although they are reflected on the lien search, any of these items that are not reflected on the title commitment, it is not a requirement that they be resolved for closing unless you guys add in your additional terms section of the contract that they must be resolved, right? Open or expired permits and unrecorded code violations are not title issues. What I mean by title issues, meaning it will not prevent us from closing. It will not prevent the title team from closing your file unless you have language in your contract that calls for it, right? Not provided that language previously, right? So the association estoppel. This is an example of an association estoppel. This particular file, the seller has a credit of $3,450. Closing agent will need instructions on whether or not that's going to be transferred over to the buyer. Of course not. If it is, then of course the buyer is going to be charged for it. The maintenance amount. This property has a quarterly maintenance due of $1,875. You're going to see that on the settlement statement. It says that the next payment due is July 1st. If it's late, there's going to be an $80 fee charge on the 15th. Remember, I told you guys that the estoppel also tells us whether or not there's any special assessments. This property has no special assessments. This is of note to you guys. You listen, although you are not the closing agent, you want to know how to review these documents because, for example, you went under contract, you represented your buyer. The seller indicated that there are no special assessments. You have a rider, a condo rider that says there's no special assessments. But you get this estoppel back and it says there are special assessments. That's the conversation that needs to be had, right? Now, of course, your rider has language for this. It says that if special assessments were not disclosed when you went under contract, generally the seller's responsible for that. So again, if you get an estoppel back and it has special assessments reflected, your contract is saying there are no special assessments. Again, you're having a conversation with the listing agent and you're expecting to see this special assessment on the seller side under most circumstances. Because again, the seller in most circumstances have to disclose this, right? Unless it came up in between contract and closing, which that rarely happens. The buyer has to be made aware of this. Other fees, capital contribution, no. Equity membership, no. Resale fee, no. They're not charging a transfer fee. They're not charging any other fees. But note this transfer fee. And the reason why I'm highlighting this transfer fee and the special assessment is because these line items are, as well as the capital contributions as well, kind of in that bucket, but special assessment and transfer fees are specifically stated in your contract and in your rider. So now you're able to see, how would I know what that fee is? Well, it's in your right, in your estoppel. Okay. Lastly, remember I told you guys, if there's any violations, this is where we find out about them. And I always say that associations oftentimes use the sale of a property as an opportunity to clean it up, right? This property, and this is an actual estoppel, came back where the association was requiring, before we could close, the roof had to be cleaned, a hedge had to be removed, a mailbox had to be replaced, the weeds had to be cleaned out of the driveway, and apparently there was also some trash. Yeah, this property was in a little bit of a disrepair, right? Deferred maintenance. But this has to be resolved. If you get an estoppel and you see this has to be resolved. This is not suggestions. And the reason why these are not suggestions is because if a property is located within an association, that's a requirement on our title commitment. Remember, I showed you guys our B1 requirements. If a property is located within a association, there's going to be a requirement there that says an association estoppel. Comply with the terms and the requirements of the association estoppel for, and it'll name the association, right? So unlike the lien search, where unless you guys wrote something in about open permits or unrecorded code violations, anything outside of the water bill is kind of like for information purposes. But this estoppel, we must comply with it because it is specifically stated in our title commitment. The only item from the lien search that's specifically stated in our title commitment is water bills, because water bills can become a lien, right? So that's the one item on a lien search that we must comply with as a title agent. Lastly, the land survey. Land survey. Here's an example of a land survey. When it comes back, it's going to give us a sketch of the structure. And it's also going to tell us the boundary lines of the property and how that structure lands within the boundary lines of the property. Now it's going to specifically tell us by the note section. The surveyor is going to specifically identify any issues with the boundary lines in the note section, right? So this note section, and we're going to zoom in on this note section on the next slide. But while we're here, I want to show you guys what this note section is discussing. It's discussing this right here. The green line is the structure, is the structure or the property line. Here is a shed, and this is a fence. This green is a fence. This dashed red is an easement. So this note says fence and shed land in the easement along north lot line. All right. So this is not a big deal. This is not something that will hold up closing. However, if it was saying, for example, I'm going to pop back over here. Let's say, for example, this was a pool. We're probably not closing, right? One of the things I want you guys to, one of the matters with regards to survey I want to point out, on a finance transaction, 99% of lenders are going to require a survey. On a cash transaction, the owner can waive the survey. They can say, I don't want to do a survey. Well, that's fine, but you're not going to have coverage on your insurance policy where the survey, the boundary line is covered. So using the same example, if, let's see, can we tell whose easement this is? I can't tell whose easement that is, but let's say, for example, this easement holder comes back and says, we need this fence moved. Oh, and definitely this pool needs to move. You can't come back and say, that's $1 million pool. Help us. No, we can't help you because you don't have boundary, you don't have survey coverage. We call it survey coverage. All right. I see your question, Victoria. Give me 1 second. All right. So we've hit intake, escrow. You guys know the searches. You know how we examine the searches to say that we have cleared title. Now, here are some special issues to consider during closing. FIRPTA. FIRPTA stands for Foreign Investment in Real Property Tax Act. This requires a buyer who acquires real property from a foreign seller. Remember, I told you guys in the beginning how we confirm whether or not a seller is foreign by requiring that they provide us with a social security number or EIN number. We do that to satisfy this, FIRPTA. Now, FIRPTA is not the title agent's requirement, it is the buyer's requirement. The code, the US tax code is written that it's a buyer's requirement to confirm the status of a seller and ensure that if they are foreign, to withhold a percentage of the amount realized. That's the technical term from the statute, basically their purchase price. The statute is written that this is a buyer requirement, but it's facilitated by the closing agent and a CPA. Right? So what you need to know is, especially us in Florida, we have a lot of foreign owners, sellers. If you know that your seller is foreign, you should be having a conversation with them about their tax withholding, because a seller can get ahead of the game on this. They can already have a withholding certificate where it tells us, the certificate says this is the amount to withhold from the seller. It's from the IRS. We've already had a discussion with them. We know what their tax liability is going to be. This is how much you withhold. If they do not have that in advance, then there's a structure that provides for the amount that the buyer must withhold, but it's withheld via the closing agent. Because what we'll do is, on behalf of the buyer, withhold that amount, send it into the IRS so that the buyer is not in violation. Again, if there's any issues with that withholding, it's the buyer that's going to have an issue. So you want to make sure that your closing agent is following protocol, all right? Because that's going to be a buyer's fine from the IRS, not the closing agent. 1031 exchange. We know that under Section 1031 of the U.S. Tax Code, a taxpayer may defer recognition of gains. All that is saying is, this is an investment property. I don't want to pay taxes yet on my gain, my recovery, the benefit to me. I want to immediately place that money into the acquisition of a what we call like-kind property. Now, what's required for that? If you have a consumer that's saying to you, "Oh, I think I want to do a 1031 exchange," there's a time frame under which there are certain tasks that they must complete. So if you're consulting with a seller or you're consulting with a buyer that's using monies from a 1031 exchange, they must be aware of their timelines and their requirements, and they should be put in contact with an exchanger. Now, what's important here, if you have a seller, those monies, any monies from their sale cannot hit their personal account. Game over if it does. They can't, the monies can't come in and say, "Oh, I want to exchange." No, 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 no. For it to work, those funds have to go directly from the closing teams, from the escrow account to the exchanger. None of those monies can go to the seller. Any monies that hit their account is tax time, right? The other issue, permits. We talked about this when we talked about the lien search. Just a reminder, open or expired permits, unrecorded code violations are not title issues because they are not reflected on the title commitment. However, you can make those requirements for the seller to resolve by adding those additional terms in the contract, right? This is the additional terms language. Seller will be responsible for closing out and resolving all open and expired permits and recorded and unrecorded code violations prior to closing at seller's expense. There's a, oh gosh, Edivanya? Tell me if I pronounced that properly. Minnie, drop the handout link in the chat again, please. We have some new people coming in asking for the content. So that's in the handout. This language is in the handout. Screenshot it and the language is in the handout. And Minnie just dropped the handout in the chat. Thanks, Minnie. Escrow holdbacks. Escrow holdbacks. An escrow holdback can be utilized to address pending matters that can be resolved post-closing. That can be. Not everything can be resolved post-closing, right? A code violation, unrecorded code violation can be resolved post-closing. Open permits can be resolved post-closing. Mortgages, no. That's prior to closing. That's on the title commitment, right? If an escrow holdback is agreed to, make sure that the terms are clear on how and when the held funds will be released. What am I saying? Be very clear. The escrow, the $5,000 held from escrow holdback from the seller will be released when the inspector clears the open permit, right? Make sure you're very clear on what the terms are. Here's why. Unless your closing agent, let's say, for example, they're also representing one of the parties, they're not going to get into differentiating what your agreement was. They're not going to get into interpreting that, right? Now, as an attorney, have I had this issue arise before? Not often, because once it passes my desk, I'm already telling the agents, this is not clear. You need more meat here, right? But if there's been situations where an agreement has already been made and it's not clear, I've assisted with conversations. But as a general matter, remember we talked about a while ago, not every closing agent is an attorney in Florida. You know that we have non-attorney closing agents. And if the closing agent is not an attorney, they can't give you legal advice. So for that reason, you want to make sure that if you do an escrow holdback, your terms are clear. Right? All right. Last few of the special issues: spousal joinder on mortgage. Due to Florida's homestead interest afforded to spouses in Florida, a spouse, even if not on the debt, even if they're separated, even if they're about to be divorced, they must execute the mortgage. Doesn't happen all the time, but it happens more than we would like, where a buyer is going through a divorce. we were the lender. This because of Florida's homestead laws. The spouse must sign the mortgage. What they're going to do by executing the mortgage, they're putting a lien on their homestead interest. They automatically get a homestead interest. We know that in Florida, your homestead protection is that you cannot be compelled to sell your home to satisfy a debt. That's called homestead protection. You can take everything else, but you can't take my home. When you execute a mortgage, you are specifically agreeing to allow your lender, that lender, to take your home in satisfaction of that debt. So that is why a spouse generally must execute a mortgage. Now, a lender could say, don't worry about it, title experts, they don't have to sign. Okay, well, they're going to give us that in writing because we're issuing them insurance policy as well. They need to know you can't come to us if you go and you need to foreclose on this mortgage and Susie Sally hasn't signed the mortgage. We told you that they're married, they need to sign. You said it was okay. All right. Now, similarly, selling a property. Husband, wife is the only one on title. Husband has lived in the property, separated. That was his homestead. For all intents and purposes, until they are divorced, that continues to be his homestead. And so what does that mean? That means he needs to sign the deed, even if wife is the only one on title. He needs to sign. All right. All right. Last one. Seller mail away versus remote online notarization, or what we call RON. First of all, know this, RON is not FaceTime. And for some of you, you might think of that's insulting. Like, of course, it's not just FaceTime, Raycole. Well, you'd be surprised. I have gotten requests from agents where like, can I just FaceTime them? No. RON, remote online notarization, signing documents electronically before notary, is facilitated on a specific platform. They must log into a specific platform where they're going to have a camera. They're going to have sufficient audios, of course, stable internet, and they're also going to need to be able to answer what we call knowledge-based questions before they can sign the document. And I've literally had people who, day of closing, could not pass the questions, couldn't answer the question properly. And they're like, listen, I know where I lived. I know where I went to college. I know what cars I've driven. I know who I've taken loans out from. What is going on? Well, here's the deal. Because of those two things, the technology requirements that some people don't have, and the knowledge base, the sometimes fickle nature of the knowledge-based testing, I do not recommend RON, especially not on the day of closing. If you want to try it out days before with the seller, sure. But day of closing, right up on closing, we do not recommend RON. What's best is using a notary. Just use a notary. And of course, seller mail away is always an option. That's where we email them the documents, they print the documents, go before a notary, sign them, and then mail them back. Now, this is for seller docs. There is only one lender we've worked with so far that has allowed their entire loan package to be signed electronically. There's only one lender we've had so far, and that's been a while. Right now, if you're representing a buyer and it's a finance transaction, do not assume that they can sign. As a matter of fact, just say no, because there are 99% of lenders do not allow online signature of their documents. There's a small fraction that do what's called a hybrid, where a portion of the package is signed electronically and the other portion is wet signed. And there is just very few that allows for the entire package to be signed online. All right. So is it only for primary homes? Is that for the homestead, Gina? Matter of fact, I'll answer that at the end just to get clarification because we're almost there. Right. All right. The last one is power of attorney. This is not the magic cure all either. You're in your buyer consultation, your listing consultation, your seller says, oh, I have a power of attorney that I can use. You say, great, let's get that over to the closing attorney to confirm that it's adequate. Because there is specific language that must be included in the power of attorney for it to be allowed at closing. Also, they are highly scrutinized, not just by underwriting, but maybe even someone who claimed they might have had an interest in the property. So for that reason, if your buyer or seller is intending to use, particularly a seller, they're intending to use a POA, power of attorney, I would suggest to you, especially if they're still present, right? And if I'm present, you need to sign your critical closing documents, and we can use your POA for other non-essential closing documents. If it's a buyer, then that power of attorney needs to be reviewed and approved by the lender well in advance of the closing date, right? Because again, the language needs to be appropriate, and the package that the buyer signs at closing is probably going to have language in it. They're going to change the name of the signature block. The signature block is going to reflect who's signing on behalf of the borrower. All right. So, as a general matter, just with power of attorneys, don't be so eager to please your customers and say, hey, yeah, I'm sure that might be a problem. You're not sure. All right. Just say, let's check. All right. All right. Coming around the bend, we cleared title. You guys are clear on special issues that come up with clearing title. Let's talk about balancing figures with the lender. Now, I want to tell you guys that our policy, from the time a file opens, we first engage with the lender. We let them know that we're looking for a clear to close at least 2 business days before closing. Now, I know that, sliding into the finish line and, oh, we got to clear to close the morning of and we rushed in. I know that makes a great story and cute Instagram post, but that is atrocious for your buyer, your lender too, even if they don't tell you, and definitely for the closing team. That's just impossible. There's so much that has to happen once we receive your lender's clear to close that it is almost, what do I call it, malpractice for you to be waiting until the day of closing for a lender's clear to close. Now, if something comes up, it's just like no way possible to avoid it, fine, but that just should not be your standard experience. Your nervous system cannot take that, right? And so my closing team is trained from the beginning from the time that file comes in, especially 7 days before closing. We start peppering, we start nudging that lender. Hey, all right, closing date is this date. Where are you on your clear to close? Where are you on your clear to close? Here's why. The lender issuing a clear to close is just the first domino in about 15 other tasks that must be completed. It's not, oh, we got to clear to close, grab your bag and show up at the closing table. There's a lot of steps that must take place once the lender gives their clear to close, right? And so that's why we require 2 business days before we need your clear to close, and at least 1 business day before we need your package, right? We need your final settlement statement and your package that's going to be signed, right? So settlement statements. You should know there's 2 forms of settlement statements. There's a closing disclosure that's required on finance transactions. And this is an example of that. Whole separate class on how to review them specifically. We'd be here for another hour if we went over that. And then the alter settlement statement, which is what you guys probably call a HUD. This is not your federally required settlement statement. This one is obviously, to me, it's easier to review. You have your seller figures on one side, your buyer figures on the other side. Your debits. Debit is what that party is being charged. The credit is what's being credited to them, right? And the costs themselves are line item down the middle. Calculating closing costs and prorations. Proration, you're going to hear that term a lot. That only means to allocate proportionately. What is to be charged to you? What's your portion of this charge? What's your portion of this charge, seller? Generally the day of closing is allocated to the buyer. So for example, let's say we're in a 30-day month, and there's a 30-day fee that needs to go on the settlement statement. Let's say, for example, it's the HOA fee. The HOA fee is $30 per month, and we're in a 30-day month. We're closing on the 15th. Days proration would say days 1 through 14 are charged to the seller if the amount hasn't already been paid, and it is a credit to the buyer. I'm sorry, days 15 through 30 are charged to the buyer. Let's say, for example, it's already been paid. We're closing on the 15th. The HOA fee was paid on the 1st. Days 1 through 14 are charged to the seller because you were living in the property days 1 through 14. And days 15 through 30 are a credit to the seller, a charge to the buyer. So the seller needs to be credited for the fact that they've already paid for days 15 through 30. The buyer's being charged for those days 15 through 30 because you're now going to be the one occupying that property in that association for days 15 through 30 of that month. Make sense? All right. Taxes is another proration. Know that we have ad valorem and non-ad valorem. That's another Florida specific thing. Ad valorem is value taxes. The fiscal year for value taxes for ad valorem taxes is January 1 through December 31st. Those are paid in arrear, meaning the tax bill comes out and you're paying at the end of the year for what you've accumulated to be due during the year. Versus non-ad valorem taxes, which is they're not value taxes. Those are taxes that are charged to the property for services to the property, right? So fire, school, maybe there was some lighting work done. The fiscal year for that is October 1 of the current year through September 31st of the next year. Way confusing, I know. Again, that's a whole class by itself, but you at least know the concept. You see it here. Go back and listen to the recording, and you have the handout. All right. All right. You need to be made aware of that. Here's an example of some of the closing costs that you're going to see on the settlement statement. Know that 95 to 97% of the settlement of the closing costs that are on the settlement statement, they come from the lender. There's very few of those fees that are charged by the title agent, right? That's why the buyer, I don't want to use the term sticker shock, but they're like, whoa, like this escalated quickly. As we start getting closer to closing, the lender starts sending their figures, right? And it starts building out that settlement statement more. And so that's why that initial draft that you get is very thin in comparison to what it's going to be when they close, right? This is an example of paragraph 9 of your contract. These are 9A are costs to be paid by the seller. 9B costs to be paid by the buyer. We're going to hit really quickly this if paragraph 9C1 is checked, 9C2 or 9C3, because that's where the confusion is most time for agents. We know that, and for those of you guys, you should have this, many of you probably have this committed to memory at this point. You definitely trained. First determination is who selects the closing agent. We know that 9C1, 9C2, 9C3 is it's a negotiated term, and you're like, well, which one do I choose when I'm making an offer? Well, that's a negotiated term, and we have what we call what's customary. There is no rule. There's nothing that says that in Palm Beach County, the seller, it must be 9C1 or 9C2 or 9C3, meaning the seller must select the closing agent to pay for the home's policy. There's no rule. We have a custom, though, that the seller does. And so this graphic shows you what is the custom in each county in Florida. This is also in your handouts, right? So grab that, you can screenshot so you have it in your phone. I would have it in my phone as well, because I do. But then also, it's in your handout. So this is 9C1, 9C2, and 9C3 of your contract. right? This is the tables. This is also in your handout. Here's the quick and dirty lesson here. There are 4 features in paragraph 9 that change based upon which paragraph you select, 9C1, 9C2, or 9C3. Those 4 features are who's going to select the closing agent, who's going to pay for the owner's policy, who's going to pay for the title search, and who's going to pay for the lien search. Everything else stays exactly as allocated in 9A and 9B, all those other fees. The only 4 fees that change, and you need to know this because it's going to be reflected on the settlement statement accordingly, is again, who's going to select the closing agent, who's going to pay for the owner's policy, title search, and lien search. If you select 9C1, all 4 of those features are on the seller side. Seller's going to select the closing agent, they're going to pay for the owner's policy, title search, and lien search. And you see that highlighted here as well. If it's 9C2, everything's on the buyer side. Buyer's going to select the closing agent. Buyer's going to pay for the owner's policy, title search, and lien search. Everything else stays in its place. You see in white, these other items stay in its place. If you select 9C3 is what I call split the baby, those 4 features, 2 to the buyer, 2 to the seller. Seller's going to pay for title search and lien search. Buyer's going to select the closing agent and pay for the owner's policy. Again, don't get too worked up. You have a handout, you have access to the recording, right? So now you know. So with that being said, you want to make sure that you review the settlement statement prior to closing to ensure that all figures on the settlement statement are not only correct, but also that they are on the amount is correct and the allocation, who's paying for it, is correct. This includes credits and compensation. Oh my God, here we go with this compensation, right? Is the seller paying for the agent's compensation? All right, make sure it's there. Is the buyer paying for the agent's compensation? Make sure that it's there. Is the seller giving a credit? Make sure it's reflected on the settlement statement. All right. All right. Lastly, submit your broker disbursement instructions. Guys, get paid at closing if you can. We love DAs, disbursement authorizations. That means the disbursement authorization is when your broker signs a document that says of this $50,000 in a commission, only send us $250. Send the other $49,850 to Victoria, right? So make sure your DA, your disbursement authorization, and your wire instructions are with the closing team. We love to send wires. Everyone else gets paid at closing. Why shouldn't you, right? Now, lastly, scheduling closing and the buyer's class to close. If you represent the buyer, guys, first of all, this is one of the most important transactions of their lives. This is not a lunch break appointment. They should, you love to pick up your check, get a wire. Get a wire is even better. Let the money already be in your account. It's best for the buyer to take the entire day, not a lunch break appointment. Because walkthrough, that's a whole separate conversation. I hope you guys are not doing walkthrough days before, not even the day before. Ask my team how often last minute all of a sudden pipes break. I think the walls have what oh yes, we had a closing a couple weeks ago. I wonder if the agent's on. A car ran into the house. Nicholas, he's not on. It was Nicholas's deal. The night before, car ran clean into the house. Closing, of course, canceled. A car ran into the house the day before closing. Crazy. So things happen. But in any event, what we were saying was make sure that your buyer schedules adequate time for signing Many lenders are going to require that the documents be signed and scanned back to them for what we call funding approval. That means they're going to review the documents to confirm that they've been signed properly before they authorize the team to disperse the funds. Cash to close. This is one of the reasons why we, to the extent that we can, require lenders to give us a clear to close 2 business days before, and a balance CD at least a day before. Some buyers just cannot get to a bank or get their funds together. Maybe it's coming from a savings account or some type of other account. That cash to close has to be a wire. And definitely if it's a credit union, for whatever reason, their wires take a bit of time to process. So this is why we try to give buyers as much time as possible to get their cash to close amount and process their wire. Again, team effort. Lean on your lenders. Clear to close 2 business days before. Balance CD and package 1 business day before. All right. Now, last step, of course. Popped over too soon. Last step, of course. Conduct the closing and fund. Right? They show up. They're gonna sign their documents. Everyone's happy. As Victoria said, she's picking up her money for closing day, and everyone is very happy. We ran through that with only 4 minutes over. All right, let's answer some of these questions. All right, I'm going to read them off. Some came direct to me, some are in the chat. So I'm going to read them off really quickly. It says, I have a closing last month where you negotiated 6% closing costs you paid to a buyer. Whoa, now she has a bill from the HOA asking for $1,000 reseller contribution. You need to know why the title company did not pay the association. That is a very good question. You want to ask for the title commitment. I'm sorry, the estoppel. If you did not receive the estoppel, you want to ask for the estoppel to confirm whether or not that $1,000, the capital contribution fee, was reflected on the estoppel. If it was not reflected on the estoppel, then there is grounds for that buyer to challenge that $1,000. If it was on there, then the title company needs to resolve that because it was there. That's a very good question. That's a very good example of how that becomes an issue. Gina's question said, is this only for primary homes? So if your questions regarding the homestead, Gina, yes, because a entity cannot have a homestead, right? Only an individual can have a homestead, and you can only have 1 homestead property. So I hope that answers your question. If not, just let me know. Come off chat.
For the for the spouse, let's say if it's an investment property, does my spouse need to sign for that too, or just only on primary homestead homes?
That's a very good question. Yes. Here's why. At any point, the owner can say, they can change their mind and say, this is my own, this actually, you know what, Jan, this property is nicer. This is gonna be my homestead. That's our underwriter's position.
Okay, thank you so much.
That's a very good question. So just in case no one's clear, so Gina's question was, well, what about if they're purchasing an investment property? Well, if they're purchasing that investment property as an individual, the underwriter's position is that at any moment, you can decide that that new property, which was supposed to be an investment property, is now your homestead, right? And because it's your homestead, it's your spouse's homestead. And so for that reason, they always require that the spouse sign. Now, I've had situations similar to the example I gave earlier, where the lender was okay with putting language in on the mortgage that reflected that the spouse didn't need to sign. But again, that needed to be there so that they could not come back to us and say, hey, we need coverage for this issue. Very good question. Another question, is it normal for the HUD that the HUD changes the numbers? In my last closing, the buyer was supposed to get an $18,000 credit, and then it changed to only $6,000. But that was the money the lender at the last minute asked the buyer to send. It's supposed to be covered the proof. So in general, Victoria, yes, amounts can change. Amounts absolutely can change, and that's what. So for that reason, my closing team, for example, when anytime the settlement statement is changing, it's going out to the party, so everybody is continuously updated. If the lien search comes in, now we have a water bill that's being added. Water bill is added. Here you go. We have the cost for the lien search. Lien for the cost of lien search is added. Here you go. Right. So it can change. Now, if you have questions about why it's changing, then definitely ask for clarity around that. But in general, yes, it can change. And as a matter of fact, when our draft HUDs go out, the language says exactly that. It says, here's a copy of your HUD as of today's date. This can change, so on and so forth. But that's a good question. What is the rule of thumb for escrows, for taxes and insurance? Are those instructions usually from the lender? Meaning, clarify that, Dave. What do you mean? Are those instructions from the lender?
How many months? Like if
Oh,
you're
yes, that comes from the lender. Yep.
okay.
Yep, that's a good question. So Dave is asking impounds, right?
Yeah.
So most times, most lenders or many lenders, they'll do 3 months, definitely a year of HOA is paid up front. But usually about 3 months of taxes and insurance are held in impound. And yes, that comes from the lender. We don't make, title does not make that decision. Victoria, what is the average percentage for closing costs or the maximum percentage I should ask for a single family with a quarterly HOA fee? So the first, what's the average for a closing cost? When you say total, I would look to 3 to 5%. Now, you say the maximum percentage you should ask for a single family with a quarterly HOA fee. Victoria, clarify that for me. If you could come off.
No, hi, how are you? My question is about the same, transaction, because it's like we closed it already. They got 6% closing costs that I got it from the seller. And now this, like the title company, they did not collect, the 1,000, but I saw that they collected like monies from, like HOAs, arrears or whatever, like whatever they had paid in advance. So my question to you was like, what, I mean, like if a 6% is something like normal, or they should have enough money to pay anything related with the HOAs?
So those are two separate numbers, Victoria. I'm glad you asked that question. So I want you guys to be clear on this. So a credit, that's a credit all by itself. If they agree to 6%, that's a 6% credit all by itself. Those HOA fees are fees of their own that must be addressed. Now, the parties could negotiate and say, hey, well, we didn't realize there was, I don't know, a special assessment that we needed to pay. And so can we reduce the credit to cover the special assessment? Does that make sense? Now, that's a possibility. But in general, those are two different amounts. The credit is the credit.
So the closing cost, the 30,800 that I got for then, it was not gonna pay?
No, absolutely not.
Okay.
Absolutely not.
So they
Absolutely
cannot
not.
use it for anything related with the HOAs?
Well, what happens is what would happen is it will reduce the buyer's cash to close. Does that make sense? So it will reduce
Yes.
the buyer's cash to close. Yes. It could
And it
reduce
could be
their
that
cash to
they can
close.
even, the buyer could even have like a credit instead of paying cash to close. It could be like a credit. Is that correct?
Absolutely.
That's what I was, worried about. Like if they did have that credit, I mean, why not to use it to cover for the, they didn't call cash capital contribution, because I saw the estoppel that you just sent me yesterday. It didn't say.
I think what happened, I think they might have. Do you say you have the estoppel? Do you see it on there?
It's in the estoppel say when they ask, do they have a capital contribution? They answer no, but then they have another question if they have a resale,
Or
something.
transfer fee.
So that's the $1,000 that they're charging now.
So, but was it on the estoppel at the time?
Yeah, the staple, they had
And
it.
was it on the settlement statement?
No,
It was missed.
they missed it, yeah.
It was missed.
So exactly, so that
Now, but
very upset because she said like, okay, but if you got me 6% to cover the closing cost.
right. So, but here's the deal.
Mhm.
It's a wash, and let me show you why.
Mhm.
The reason why it's a wash is because the transfer fee or resale fee is a buyer's charge anyway, unless they agree otherwise. But that's a buyer's charge anyway, as it relates to the contract. And so, just as a general matter, let's say, for example, using your example, the 6% is $6,000. $6,000 credit to the buyer from the seller.
Mhm.
From that credit is going to be all the charges to the buyer, which would have included that $1,000.
Correct.
Which would have reduced it to $5,000, right?
Correct.
Now, in your situation, they forgot to collect the $1,000, which means the buyer got $6,000 at closing.
Not really, because that's why I explained to you, like the lender at the last week, asked for $8,000 to send it to cover, like for I don't know what he said, like it was something related that with the HOAs, that for them to prove that she has the money, like an escrow or something, but she was going to get that $8,000 at closing.
Mm-hmm.
And then they pay some, like a credit card. So at the end, she just got only $6,500 at closing.
Let's do this. Let me wrap up. You stay on. Okay. Let me wrap up, and I'm gonna end the stop the recording. You stay on, and then I'll finish your question with you. The last question was, what's the typical time period agent should conduct a walkthrough, or what happens at the end of the story? You're so funny, Audrey. The time period is whenever the buyer, and that's in your contract, the time period is when the buyer indicates that they want to walk through. So of course it can't be an unreasonable time, but the buyer says, if closing's at 12, buyer says, I want to walk through at 11, buyer's walking through at 11. Unless there's just some overwhelming reason why they can't walk through at 11. That's the time they're walking through. On the screen, I see you, Gina, 1 second. On the screen, really quickly, guys, make sure to access the recording of this training, this handout, and all our prior trainings. Make sure you join our school community. On the screen is the QR code. In the chat is the link. If you click it, it is an app. So go ahead and join the app. Be sure to invite your colleagues. If you find value, if you're like, hey, listen, you got the same questions as me, I don't know where you're getting your answers from, here's somewhere you can come and learn with me, feel free to invite them. All right. If for some reason you're not receiving our emails, things happen, make sure you send me an email, raycolejackson@purchaseready.com, and we'll get you back on track. If you're not receiving emails about upcoming classes or other sort, send us an email. Last but not least, next month, we are into our June summer selling season. Guys, we talked about the financing process last week. June is all about the money. Show me the money. June 5th, pre-approved and ready, how to build a high quality buyer database. Guys, people just sitting in your database, a name and email address is cute, but are these people pre-approved? We are in a buyer's market. We are in a buyer's market. And there's properties that are coming up all the time. And so let's cut down the friction between approval and contract and have these people that are in your database already pre-approved. So that's so soapbox for me, because listen, that's what Purchase Ready is about. That's how you take advantage of opportunities. We are in a buyer's market like nobody's business. The contracts that I'm seeing coming in, the terms that buyers are getting, oh man. Anyway, June 12th, a loan for every home, essential mortgage products every agent should know. There's about 5 core products that every agent should know. whether you're working with a first-time home buyer, a move-up buyer, a veteran, an investor, someone that's looking to move down, or a second home. You should have about these 5 loan products committed to memory to have a conversation about. Pitch them over to engage your prospect. Pitch them over to the lending team and let them determine which of those products actually fits. But again, you want to be able to engage a prospect. Let them know that you know your business. Finance, what did we talk about last week? About 87%, that number is rising. The lion's share of your buyers are going to need financing. How could you not know about financing to at least be able to have a conversation with them, right? June 19th, strategic use of seller concessions when representing buyers. And June 26th, cash to close, navigating Florida's down payment assistance programs, all right? So that's June. June, we are talking about the money. Make sure that you guys are here every Thursday at 12 noon. Make sure you are part of the school community so that you get access to the recordings and the handouts, all right? All right. Follow us on social. We're a few minutes over. The link to our social is in the chat. Everybody that needs to go, see you later. See you next Thursday. Gina, you have a question. Go ahead.
Yes, thank you so much. My question is, if the final settlement numbers are supposed to be given by who?